Welcome back to MB Capital Strategies. Today we continue with the mining series. Anglo American is one of the largest mining companies in the world. Copper, iron ore, platinum, nickel, and diamonds. Basically everything you want to have in the upcoming commodity supercycle. And yet the stock is weak, profits have collapsed, the dividend has been cut, and the market is extremely suspicious. So the question isn't whether Anglo American is a good company, but rather whether this is currently a turnaround opportunity or a classic value trap. And that's exactly what we're going to clarify now. Figures, cash flow, balance sheet. Let's first take a look at how I am invested here. In total, I hold 7.52 shares. My entry price was €29.42. I hold a total of 221 shares. Currently, I have an unrealized profit of €21.68, which is 9.79%, and I have already received a dividend of 16 cents. Anglo American is a globally diversified company, a miner focused on copper, iron ore, platinum group metals, nickel, and coal, though currently with a reduced share, and diamonds from De Beers. It's important to note that this is not a one-trick pony. It is highly dependent on the commodity cycle. Compared to Rio Tinto or BHP, Anglo is structured more complexly. And that's exactly what is both a curse and an opportunity right now. The 52-week high and low range from €22 to €35. Currently we are at €32.07. Analysts have set a target here of €33.50 and investing models puts it at €28.40. The one-year performance is clearly weaker than the S&P 500. We have a significant underperformance compared to BHP and Rio, and we have negative sentiment. The market is currently pricing in a weak commodity cycle, operational uncertainty, and declining margins. But the market is almost only looking at profits and not enough at cash flow. And this is exactly where opportunity arises. Now let's move on to revenue and profit development. What does it look like there? 2021, 2022, peak due to the commodity boom. 2024, approximately 26 billion in revenue, and currently compared to the previous year, about minus 11% profit. In 2024, we have a net loss of about minus 3 billion. The operating result is negative. The reasons for this are high write-downs and weaker prices for platinum and iron ore. Importantly, this is cyclical and not a structural collapse. Anyone who values mines solely based on profit buys at the peak and sells at the bottom. Now let's move on to cash flow, the crucial point. The operating cash flow in 2024 was about 7.8 billion. Despite the loss, yes, weak prices and high costs, capex is about 5.3 billion. Yes, that is high, but copper, nickel, future metals. This is not a strategy of depleting substance. Free cash flow is 2.5 billion and it is positive. That is one of the reasons why I hold Agnico. Cash flow pays the debts, cash flow survives cycles, and cash flow brings back dividends, not profit. We have total debt of about 18.3 billion. We have cash and short-term investments of 7.9 billion. Net debt is visible but manageable. We have equity of about 27.5 billion euros. That means we don't have a toxic balance sheet, we don't have a fire sale, and we are not under acute refinancing stress. But of course, leverage increases in a down cycle. Management has to deliver. Why do I hold Anglo? Now we come to the core of my investment case. Anglo doesn't just make announcements, they follow through. What has already been implemented? First, we have the Platinum, the merger 2025. And here we have Valtra Platinum. Shareholders received separate shares, a classic value unlock. That means you simply receive shares here when they are spun off. And as you can see here, I also have Valterra Platinum in my portfolio, among other reasons because I became aware of it when Anglo American spun it off. And here I bought more, and the same thing happened to me with Thungela Resources. And that's why I also decided to simply increase my position in Anglo American. Of course, the dividend is not high at the moment. We have 0.79. That's quite clear. Not a dividend stock at the moment. What is already being implemented? Sale of nickel and steelmaking coal. Increased cash inflow up to 5.3 billion US dollars. De Beers Diamonds is set to follow. What is the goal behind this? Moving away from complex conglomerates towards copper plus premium iron ore. That's exactly why I hold Anglo. Spin-offs create value without new capital. And now to the game changer. Merger with Teck. Now comes the big strategic lever. Anglo plus Teck Resources announced for September 2025. The shareholders approved it on the 9th December 2025. Approval at Anglo was over 99%. Completion is expected around 2026. Regulatory approvals are still pending. What is being created here? Anglo Teck, a top 5 copper producer worldwide with over 70% copper exposure and headquartered in Canada. So what does copper stand for? Copper stands for the energy transition, grid expansion, and e-mobility. This is no coincidence, but strategic. This results in synergies worth approximately 800 million USD per year. What are the operational advantages? We have neighboring Bad and Shield assets, we have economies of scale, and we have better project management. Now let's move on to another important topic because there have been a lot of rumors about it. If you would also like to use InvestingPro, among other things, you are welcome to do so. The affiliate link is in the video description below. By using my link, you will also get an extra 15% off during the promotion. Now let's get to the topic I already mentioned. There were rumors. Specifically, we have BHP as a shadow player here. In 2025, meaning this year, BHP showed interest in an acquisition. The offer has currently been withdrawn. For now, the merger with Teck has failed. Could BHP come back? This creates significant market volatility and a sense of uncertainty. But it also establishes a certain kind of implicit floor for the market. And now let's consider the potential risks that lie ahead. Asset sales could be delayed for quite some time. They could even be blocked by regulators and ultimately end up disappointing investors in terms of the final price. So, the merger risks. The risks of the spin-off are the integration of two corporations. We have different cultures, meaning IT as well as process management and operational issues at Teck. For example, if the integration stumbles, then there will be no synergies. Cash flow suffers, and the valuation will remain low. So what is the conclusion? It is definitely not a buy and forget. It is not a dividend anchor, but rather an execution and cycle play. If the asset sales succeed, if the proposed mergers are fully approved, and if the expected synergies are realized and copper turns cyclically, Anglo will become a copper powerhouse with a higher valuation and more stable cash flows. If that fails, it will become a value trap. So my strategy is therefore to take a small position, closely follow the news flow, and in the event of regulatory approvals or successful asset sales, selectively increase my position if appropriate. Let me know in the comments, do you hold Anglo American? Is it a turnaround opportunity or a value trap? If you enjoyed the video, feel free to give it a like. If you haven't subscribed yet, I would appreciate it if you did. That's it for this video. I wish you successful investing and see you in the next video.